Good morning, retail traders. This is Washboardjim with a sneaky snake trading strategy where I love talking about chart patterns, moving averages, and being in the now. And there was a news article out just yesterday. Joe Biden came out and was telling the world that I'll tell you about climate change. It's not the damn oil. It's not the damn Russians. It's not the damn Chinese. It's that James Howard guy. Every time he sings, thousands of trees die around the world. A-I-O-U. So that's a fact, Jack. I'm not the best singer, but I can whip out a tune. So we're going to go over the watch list of the sneaky snake trading strategy. I got a watch list here I call the Tony and Jim. I've been going over it. I think Meta earnings was a big deal yesterday. I thought we were going to go up and hit the top of the channel again, but earnings were good, but his investment in AI was a little bit heavy. So that caused the stock to pull back. I have a natural support down here right around 406.29 and 388.65 and 45, and I'll show you how I got there. Pull up the 90-day 1-hour time frame. And we had that big run up, big gap up right here on that earnings day. And I think we're pulled back right to that same period. That's called a gap up. I call it a gap trade. It pulls back, fills up that gap. I mean, it ran straight up. I remember that day, I was just going nuts. So come on, this thing's way overbought. And then it just kept running on up, and they were still pumping this stock. But at one point, you got to sit back and go, wow, is this too much? So it did come back real fast, and I lost my contract probably on this one here. I swung it overnight, so I'm definitely down on it. Meta, I think, is a big deal, but the market will look, okay, he's just investing in AI. It'll pay off. I can hear Mike Santelli right now shaking his knobbling in his head, jumping up and down, saying, oh, it's going to be great, man. He's going to invest more in AI, and it's going to bring up the... But I think that it needed to have a pullback, and this was perfect to start investing in Facebook again. So I'll be watching it today. I want to see a little pullback, and I'll tell you where I think we can pull to on the 1-minute time frame. So this is the big knife we had. I got in this trade down here at the bottom, and it run up, and I was up 80, 90 bucks, 110 bucks, and I should have sold it. And then boom, man, I really thought I could probably get another 100%er out of this trade. Instead, it just tanked. And I just ate my lunch. And got this channel, and it pulled right back inside of that channel. So if we pull back maybe to the 200 today, or maybe down here at this lower support and not hit a double bottom, create a higher low or another right shoulder, I think this would be a great trade to jump in and scalp today. I'm pretty hyped about it. I got to make back probably $400 or $500 here. So I'm thinking 410.53 at the lowest. Whoa. How'd that happen? Or the 200 SMA, and just respect that 200 and then come back up and try to break that resistance. That's your resistance. And again, I like to point this out. This was an old trend, right? If you haven't noticed this before, you can extend them lines down and use them as support and resistance levels. This thing could have easily stopped down right here and stopped right there and bounced back up. But with that huge investment and all that cost, I mean billions, I mean a lot of money, it had to drop. So we'll see about Meta. I'll be watching it real close today. Tesla, again, shocked the trading world. Wall Street and I have two different opinions about Meta. I don't think it's about money. I think it's about getting cars into people's hands. He doesn't care about money. He's filthy rich. Wall Street, margin, you know. Oh God, they're cutting the cost of the Tesla. That's really going to hurt the margin. But it's Wall Street and Main Street have two different opinions on Tesla. I'm a lover of Elon Musk. I've been following the stock for a long time. So this is in a tradable area right now. The fat cats kind of looked numb, stupid yesterday, the way they were talking about it. They were expecting, people got this thing going down to 115, 120, 100, even under that. The EV sector has been hit hard. The government is forcing this crap on you. You let the private sector make the decisions. So that's the problem right now with the EV sector. It has nothing to do with the manufacturers. It has everything to do with the federal government. So I think the opposite. Tesla, I love Tesla. I'm going to keep trading it. I swung this overnight and made almost $1,000 on one contract. You get a spike like that, and there's a lot of bears and a lot of fat cats that bash his stock consistently every day, all day long, for years. They do not like Tesla. I don't understand it. I think it's the greatest thing in the world. So we're going to pull up the 20-day 1 hour. We had a snake breakout. We're going to try to pull this thing back to this area right in here and create a right shoulder of inverse head and shoulders. That's your right shoulder right there, and it runs into the 63 EMA on the 1 hour time frame. So set you an alert right above. You want to look at these candles and try to find a little place above it to where you can hit that. And I'm going to set this alert right at 156.05. And I want to prepare. Once it hits that, I'll be watching it and see if it wants to go ahead and touch that 63. By that time, you know, the stock, the moving average might be moving up some. So whenever it comes close to that 63, I'll try to jump in that trade and call it a inverse head and shoulders, left shoulder, right. And then it could come down, come back up, and then pull back down again and create another right shoulder like it did here. So pay attention to that. Comes down and hits the shoulder once, comes back up, a little lower high, comes back down and hits the shoulder again, and then see if it doesn't break out to the upside. That's going to be Tesla. So definitely set your alert at 156. NVDA is going to be, people, you know, we got another snake, breakout, pull back, and we should come back up to the 200, probably today. And that's right around 847. I would consider hitting that 200 SMA, the 200, the 200, the 200, the 200, the 200. And we come back up here, do a double top, and get out of that trade at 842. If it breaks, I mean, you got a lot of good upside to this stock. It is consolidating. I think we called out the 3 black crows here. Nice little bounce. Now it's come back, so we got snake, breakout, pull back, higher low, back to the 200. NVIDIA. SPY. I love trading the SPY. We got a falling wedge, breakout, pull back to an inverse head and shoulders. Go ahead and put your trend line right. Well, okay, I'm going to show you two things here. Diagonal. I mean a horizontal. 499.75 support. You got your left shoulder, you got your head, and you've got your right shoulder. Come down and touch that. Do the same thing. Come and try to break that 200 on the 1 hour. Now, the other one is to take this line, hit that shoulder right there, and then run it up through here. We've got shoulder, resistance, resistance, and support. So this thing could easily squeeze on out and break up to the resistance level of this pullback right here at 513.11 today. This is an inverse head and shoulders. I call this out all day long. I scalp this trade. I make good money on it. It's pulled back. We've had the snake breakout, pull back, higher low. This could be a good trade today. The SPY. Watch the SPY real close at open. Let it break out, pull back, and then jump in the trade once it forms a flag. Amazon. Snake breakout, pull back. Now, why did Amazon go down? Jeff Bezos reveals his unconventional approach to productivity. Meta, IBM, Amazon, 5 stocks on the radar today. JP rates outperformed on Amazon, maintains a 225 price target. I mean, this was yesterday. JP Morgan unveils AI capabilities. Yeah, this is overbought, oversold. This will be a good trade today. Amazon. Keep a good eye on Amazon. Now we're going to pull this up to the 1 minute right now, but I want to draw a resistance line from this previous pullback. I'm not bullish. I'm bullish because of the momentum and the way the fat cats are running up this market. I mean, we're still way overbought, and I'm going to keep playing that same game. But I want to show you something here on the SPY. Here, after I go back to the SPY, I want to show you something. The market, these people are acting very irrational. They're not acting... I mean, they're acting extremely greedy right now. I've been watching the stock market every day for 20 years, every single day. Maybe had a week off, maybe a couple weeks through that whole period. So we're going to bring this to the 1 minute. We could double bottom at the 170, 174, maybe right around 170, 185. Set your alert just a little bit above it. Now, I usually use a 3-day rule on something like this, which means after sales or after some knife or some event. But we're going to see today how this thing turns out. I mean, I like catching these knives on these companies that have money and that have, I mean, that are high volumed and they're talked about every day. Trading these penny stocks, I mean, it's great to trade penny stocks if you know how to trade. But some of these stocks, man, they're up so damn high, you got it, they're going to pull back. And you just got it. I've been saying it for 2 or 3 months, and if you followed my plan, you'd be making a killing right now. We are overbought. Way overbought. Still. But when we have these huge pullbacks, they're great opportunities to scalp and day trade and pick up on the momentum of the market. I'll show you exactly how you can do that by pulling up the SPY. Pull this up to a weekly time frame. I'm going to clear everything out. And I talked about this for months. I said this market's had way too big of a run. It's not normal, and we're going to pull back. And if you want to be smart about this, if we do not hold the 9, that was the second week of the pullback, we will land on the 21 and bounce. I got videos, I've talked about it for months, for weeks. And we can pull back to the 63 EMA if the war gets worse than what it is. If Wall Street's blaming Iran on this, I'm not. I'm blaming it on an overbought market. I've been here 20 years. I'm not seeing anything like it. I'm playing it just perfect. I've had a couple bad trades, but man, 95% is pretty good. So I'm extremely cautious here at an extremely greedy level. During war times, during a president that can't speak 5 words in a straight sentence. So the 21 EMA will be your support, and your resistance to break will be the 9. We could keep playing in this channel and go sideways and create a symmetrical flag, and then maybe have a down tick. So just be very careful to this previous high, and that will be a strong buy to really put your money back in the market. Around 457.86, and that'll be oversold by then. As long as we stay above 500, we're still bullish. If we go below 500, you got to be a little bit more cautious and wait for that next support level, if it stays below that over a day. So that's the trick. We're squeezing right now. We could have another day here of a pullback of consolidation, maybe into a smaller candle, or we can just break that 9 and run it on up to the top of that candle right there and call it a day at 5:15.52. That's it for right now. I mean, this is a little extra long, but I kind of just wanted to be a little bit tighter on some of these. I mean, there's a lot of good trades in here right now. Apple yesterday had a good day. We've had a huge pullback on Apple. It's a bull flag. We have a 1, 2, 3 setup. What is a 1, 2, 3 setup? I get a knock on the door. Hey, Jim, what's the 1, 2, 3 setup? I hear you talk about it all the time. Well, it's all about the squeeze. You want to be, it's like a baseball bat, I compare it to. A baseball bat has a sweet spot. So does this. And the sweet spot is on the number 3 or the number 4. So you're looking at a bull flag. This is on a weekly time frame. Just barely touched, barely. So that's a higher low. You got body of that candle, the body of that candle, and you've got a higher low, which is a beginning of a breakout, which we created this week with a tweezer bottom. So you want to run it up to the 9 and find some kind of resistance at right around 172. And that'll be your exit idea, unless it gets some kind of news and wants to go ahead and break out of this 1, 2, 3. So you count to 3. You can learn to trade with me. 1, 2, and we got to wait for that 3rd spot. And if it doesn't break out there, it pulls back to the 4th time, you know, you're starting to look real weak. But if we pull back, 3rd time, because this is a higher low, so you still have a chance for it to pull back and hit this trend line and stop there, and then come up and break out. So right now you have 2 options. We break out from the higher low, which is on this here trend, to the upside for a resistance, and if we don't break that, we get out, or it pulls on back, finds support off this line, and then we jump in the trade and run it on up to the upside. So go in small. It starts to move up, add on. If it starts to pull back, wait for 161.50. I'll set the alert at the mark and at below. That'll be a very strong buy, I think, if Apple can touch it. But right now it looks a little bullish to me because we got a tweezer bottom, higher low, and we could bounce up here and hit that resistance level and then take your profit off the 63 EMA. The 63 allows it to be a support level, and now we're going to look at it as a resistance. And the 9's there to block the barcade. So the 9 could be an exit idea too. here on the weekly time frame. And that's it. Sneaky Snake trading strategy, where I love talking about chart pattern. There's a lot of good trades in here right now. We've had a good 3-week pullback. They call it 3 black crows. Just in case you didn't know, I called this out. 3 black crows. 3 black crows is a phrase used to describe a bearish candlestick pattern that may predict a reversal of an uptrend. Candlesticks charts show the day's opening high and low and the closing prices of regular securities. So 3 black crows is a bearish pattern, but I've traded a lot on different time frames to scalp it on the 1 minute, 5 minute, scalp it on the hour, day trade it, swing trade it on the daily, swing trade it on the hour, and also swing trade it on the weekly. So, I mean, I trade it differently on different time frames. It's more bullish on the 1 minute, and it's more, if it doesn't, I mean, if we produce a red week, the next week could be green. But if we have 2 red weeks and then we have a third one, man, I'm ready to go to the ring, fight Devin. I was very impressed with that Ryan Garcia fight. That was probably one of the most planned out, fake out. I mean, I used to box. I mean, I'm just really impressed with how Ryan Garcia took that fight. Very impressed. So, 3 black crows. Keep an eye on them. And that's it. Retail traders, wish you a great day today. Be patient. Be calm. I think we're still way overbought, but these people on Wall Street, they're pumping this market like they've never seen it. I've really got to explain something about, they've made more money in the past year and a half than they have probably their whole entire career. The fat cats have made more money in a year and a half than they have their whole entire career. They did the same thing back during the Obama days. I watched it every day. I watched them fat cats bring the market down. They dropped it 50%. They all loaded up, and they took it to 20 grand, the Dow, from 6,500. So it's pretty fun. Be ahead of the game and be on top of the game. And you all have a great day, retail traders, where I talk about chart patterns, moving averages, and being in the now.